All right. Okay. Well, we're going to start our seminar this morning. Thank you, everybody, for coming along early this Wednesday morning. We are recording this. This is going to end up as content on YouTube and LinkedIn and all that sort of wonderful stuff. Feel free to ask questions, I think, along the way. We're happy to be a little bit interactive. We are talking about the topic of from finder to fixer, how brokers are becoming the business world's secret weapon. And this topic is something I've been in finance for many years, believe it or not, and I have seen that the role of finance brokers, to me, has changed, particularly over the last few years, really, more so than anything else, where it's not just about the finance anymore. 5 years ago, 10 years ago, if I was talking to a finance broker, for example, they weren't necessarily fully au fait with how the tax office worked, directors' penalty notices, all this sort of thing. And if you'd spoken to a broker then, they weren't really that much across it. These days, with all of the activity that we're seeing in this sort of post-COVID environment, you are seeing brokers having to be more knowledgeable in that area. And they are small businesses, because of the lack of, certainly many years ago we saw the demise of the bank manager, whereas the bank manager used to be almost like the family doctor. They knew all about the business and they were able to give advice. The broker very much has stepped into that role these days. The broker is the one person who has that business continuity with the business over the last 10 years, for example. They've been financing their cars and their houses and their business and whatever it might be. So the broker is morphing into an advisor, a trusted advisor, a confidant, and this is something that I wanted to talk about today. So I've got a couple of guest panellists. We've got on my left, I've got Anthony Brittain, and Anthony Brittain has his own firm, Solution Partners. His CV is he was at Macquarie Structured Finance, in wholesale as well. Spent some time at Credit Suisse. Was in debt and capital advisory at PwC, and these days a bit of debt advisory and also a bit of advice to credit funds as well. Yep. So I'm sure lots to assist with there. We worked recently together on a matter actually that was very much a hands-on advisory role that you played with a business, and I still think we need to lodge that as turnaround of the year, but we can talk about that with the TMA another time. And Cameron Whinnett, who also did some time at PwC Advisory, has a business today called Thrivio, and I was partly inspired for this seminar when I had a cup of coffee with Cameron the other day, and he was telling me about a new product that he's developed called Director Shield, which is designed to help small businesses navigate the challenges in the modern world. I mean, the small business proprietor is very much beset upon these days with legislation and regulation, and so that's really what's driving this closer relationship they have with their commercial finance brokers. So I just wanted to start off with, by way of introduction, we often think of brokers as deal makers. As I say, today they're being called upon to help solve more broader problems. I'll start with you, Anthony. What does it mean for a capital advisor or broker to be a fixer in your world?
Nick, you made some really good points in that introduction. I think one of the things that has changed over the last 10, 15 years by regulation, and banks and lenders used to be all about credit. So, bank manager would understand you, would understand your business, and banks could actually measure credit. If that credit was too difficult, it would go into some credit funds or non-bank lenders, but there was this kind of credit spectrum. And now with, it's bank capital requirements, it's APRA, it's everything, but the big banks don't measure credit anymore. They measure process risk. and if you don't have all your docs in place, then we can't give you a loan. It kind of works by default that if you've got all your docs, then the credit must be okay. But they just don't measure credit. So everything that ends up with non-bank lenders, with brokers, with credit funds is now, again, it's not necessarily a bad credit, but there's some missing information. There's some missing steps, and that's why brokers need to understand that sort of the broader implications for their clients. So, I think the biggest thing they can do is really just prepare. It's get information in order, understand the situation, present it very clearly to a lender. Seek help where necessary. That different perspective of different advisors around the table, very much helps. But really, it's just preparing your client. It needs to be a little bit more value add than just pass the information on to a lender. But prepare, whether it's legal, tax, compliance, accounting. Just get it prepared so that when you do go to market, there's a story to tell, a very clear story for the lender to understand.
Okay, and what have you encountered sort of in the last 6 or 12 months in a capital advisory role where you've had to go a little bit beyond just lodging an application for funding? Yeah,
I think we were just talking offline about this, but there's a bit of digging as well. Finding out what the real problem is, sometimes, and unfortunately, if the problem is just that the company, the client is not profitable, right? There's not too much a lender can really do. Sometimes it might have to go somewhere else before it comes back for a real lending opportunity. But and that's where things like Cameron's product comes in very helpful, because it's diagnosing what the real problem is. And if you can't, you're not going to sort of magically turn losses into real money to fund it. No one wants to fund losses. You've got to understand where it's really going.
All right. And Cameron, what does it mean to be a fixer in your world? And maybe tell us a little bit about this Director Shield.
Yeah, sure. So I call myself two things. I call myself a director's advocate and a financial strategist. In my world, being a fixer is very much around controlling the process and controlling something that the business owner doesn't believe can be controlled. They've been stressed for a significant amount of time. Something's triggered the financial distress. It might be, the shed's burnt down, or it might be that the market's tanked. It might be, a divorce. Divorce is something I see a lot of. But something triggers the financial distress, and the business owner's immediate reaction is, okay, well, I'll just work harder. So what happens is they dig in, they work 18 or 20 hours a day, and then in 12 months' time, they're physically exhausted and their decision-making capability starts to just wane. So people that are generally really good decision makers, or historically been very good decision makers, are no longer capable of making good decisions. So it's very much about pulling these sorts of business owners out and going, no, you've got to look at the woods through the trees. You're worried about this particular staff member going. In the grand scheme of things, who cares? So having that person in their corner as that director, as that advocate for the director, who can see the bigger picture and to I guess pull them out of that stupor is what I consider to be a fixer in this world. And then it's around connecting people with the right people, connecting the likes of Nick's to these opportunities, because if we can resolve the underlying problems, then Nick can help us resolve the debt.
Yeah, I think this thing of connector is very interesting. I mean, we've seen a lot of deals lately where you look at the business, and yeah, I mean, I guess there's a bit of fatigue, whether or not it's caused by divorce or what it might be. That's very interesting. You talk about people wanting to, they think the answer is just work harder, and they're taking it upon themselves. But I'm thinking of one exactly at the moment. A manufacturer had got themselves into a mess. You go and meet with them. Now there's insolvency people that are sort of hovering around, and it may well need to go through that process. The finance brokers are very much focused on just raising money, and you go there as the lender, and you go, well, I can see how money's going to put this immediate problem out, and I can see how maybe some sort of restructure might work as well. But you sit there and you talk to the client about what are your margins, and he's got no idea. So to me, then I need to pull in someone. For example, Anthony and I have talked about this, or perhaps even yourself. This one was in Sydney, and I spoke to someone locally in Sydney about getting in there, preparing three-way forecasts, making sure the business is profitable. But this does mean bringing in an external party. And the broker then needs to have those connections to be able to bring them in. All right. So Anthony, you're working with some fairly complex capital structures actually, and alternative lenders. What are you seeing? You mentioned before about it not just being about the financials, but people are being judged whether or not they can produce the documents in the first place.
Yep.
I mean, are lenders looking beyond the financials? Are there any other compliance or any other?
Oh, there's plenty, but first let's say, and just to reflect on that first question as well, in my background, in my experience at PwC, in a transaction services environment, so you would generally assist a client with a financing transaction, M&A process, or whatever. But the very big advisory teams, it's so transactional focused that you're just in and out over a transaction. It's probably on the expectation that the clients have all the information you need to run that process. Since I've stepped out and just doing my own consulting, I see the role of my role is far more broader than that, because and I'm not a broker. I do work for borrowers, but I would rarely help my clients just raise the finance, and I kind of see even if it's that the financing is a 1, 2 or 3 month process, my role is probably more about 6 months, because it's like, yes, the client comes to you and says, I need money, I need to refinance. Well, yes, but to do that we need to get in and tidy up things first. We need to have some presentable numbers. We need to understand why you need capital. It's not always for growth, it's to fix some problems. So I would normally sort of get in there and spend some time understanding the client, preparing some forecasts, tidying things up, tidying the balance sheet up, making sure the compliance is all up to speed, and then really formulating a plan, because lenders need to understand what's the story here, what's actually going on. But it also comes back to simplicity, right? So at the end of the day, a lender needs to understand how much money do you need and when, what's the security, and how is this going to get repaid, right? And we see far too often from some brokers, it's like, here's all the information, you kind of sort it out. But I spend the majority of my time going through and just trying to get to those kind of 3 bullet points of how much and when, what's the security, how's it going to get repaid. And unless you can sort of get that very, very simple deal summary into 1 or 2 paragraphs, it's very difficult, right? So I kind of think there's not really such a thing as a really complex deal. It's complex information, and so you've just got to dig through all of that information and present a very simple story. Because as good as Nick is, and as good as Hermes Capital is, and as good, there's a lot of very good sort of funders out there in kind of complex situations. It's not really super complex. It's just digging through all of the mud to get to something that is very simple.
What about, I mean, in your role, you've raised capital, but also given the lender ongoing reporting. So how important is that, or how important can that be in, I guess, in non-vanilla deals? I mean, does that make a difference to the lender? I know it makes a difference to me.
Yeah.
But what about more generally?
No, I think it does. You know, I think people forget how important relationships are with, you know, your sort of capital provider. You know, borrowers in the past have, you know, it was transitioned from, you know, your bank manager was a friendly party, was there to help you. But banks have, and lenders have sort of become the bad guys. But there's no need to have them as bad guys. They're just providing a supply to your business, that supply being funding. They need to get paid the same way that your other suppliers need to get paid. And they also, their interests are fully aligned with your interests as a business owner. So, you know, if you want to make money, they'll get repaid. You know, if you don't want to pay them, that's just a terrible outcome for owners and lenders, right? So, that in a bad situation, it's always that transparency and communication, which is the first thing to go, and therefore the first thing to fix. When I talk about the complex information, sometimes it's the credibility of the borrower, which is an issue as well. So the best way to address that is, here's the funding, we've just done a deal, now don't let me down, right? And the best way to not let me down is provide regular updates. And Nick can deal with businesses that perform poorly. I mean, the economy is outside of borrowers' control. You know, customer behaviour sometimes is outside of you know, the business's control. But not reporting on your business, not telling your lender how you're going, that is going to impact that relationship. And, you know, is a lender likely to support somebody that doesn't tell them the information, or that does share everything and can truly understand it? All right. If you don't tell the lender something, they're going to assume the worst. Absolutely. Right.
I'm thinking also, like, you know, a deal that we did very recently, where the financials were a mess.
Yep.
And you know, we made it a condition of our approval that someone was engaged to provide the monthly reporting.
Yep.
And I wouldn't have done the deal without that, because you know, we don't, you don't want people, they got into this mess, you're giving them funding to get out of the mess, not to just get straight back into it. So I mean, as I say, for me, it's an approval condition, and I want that monthly reporting, and I want someone engaged who's going to provide that reporting. I mean, am I on my own, or are other lenders?
I see it a lot with probably larger credit funds, right? Which might be missing something actually, because, you know, the larger credit funds are still focused on financial performance, right? So it's like, I want to see your management numbers every month, and, you know, your board reports every month, management reports. But it does skip some of the smaller, you know, compliance matters, right? And some of the smaller details in the balance sheet. So, I mean, for me, as a, you know, I've been a lender before, you know, just getting those regular check-ins and the timeliness of it as well. Like, I can't understand how a bank wants, you know, your annual financial statements kind of 4 months after the end of the financial year. How does that protect their money? I mean, it probably goes to the fact that they don't have that much credit risk to begin with. But that regular reporting is just, to me, is just paramount for a lender. And that is one of the services that I sort of provide on a deal. It's the pre and post deal support that makes you a better borrower, more likely to lend again as a lender, and a lot more flexible as well, right? If something isn't going to plan, the lender gets the timeliness of information and can make a dynamic decision about assisting more in the future.
Okay. Cameron, we were talking before about underlying causes of issues, we're talking about teams. I mean, brokers do. It is a competitive market.
Mm-hmm.
One of the things that's coming up now is AI, and how your vanilla transactions. At the end of it, I don't know, car loans, home loans, a lot of the bread and butter for a lot of brokers may be taken over by AI. And so it is important then for the commercial broker to be adding value in other areas. I guess, how do you see that in terms of how brokers can identify, as I say, not just the financials. So yes, as AI emerges, and we were talking earlier about Elon Musk and all the wonderful things. I mean, how do you think that brokers can add value outside of that, the purely transactional?
So I think what you were saying before about the role of the bank managers no longer exists, and that's now been replaced by the broker is spot on. I think the reality is the broker should be talking to their clients regularly, multiple times a year, and there's cues that a broker can pick up on in the early stages of financial distress. There's a bit of a catch-22 in this space, is that the longer the distress lasts, the less options are available. If you get onto it sooner, then you may not even need any form of formal insolvency. We may be able to restructure the debt. That restructuring might be reasonably simple because there's security available or whatever it might be. But the longer it drags on, the harder and harder it gets, or the less and less options are available. The catch-22 of it is, though, that when a business owner is going through financial distress, they're also going through a grieving process. Their business is their baby, it's another child, and when your child gets sick, that hurts you as the parent, and that triggers a grieving process, and anyone that works in that sort of space realises that grieving process takes time to work through. And you go through all the stages of denial, and until you get to the very end, where you get to the point where they accept it. They accept what's going on, and it's not until they get to that point where do they go, oh, hang on, actually maybe we need someone to help. And whether that's a broker, or whether that's someone like me, or whether that's an insolvency practitioner, whoever that might be. The problem is it takes time to go through that grieving process. So as that time has gone, there's less and less options are now available. So the role of where the broker can assist with that is identifying where that interaction might be happening with a business owner early, and trying to get them through to that acceptance phase faster. They can look at indicators like, what's the ATO debt doing? Is the employee super getting paid? Are the directors taking a wage for themselves? They're the kind of indicators that would they're the early stage thing. Oh, I haven't taken.
That's a big one. We were talking about that the other day, actually. Just talk a little bit more about identifying the directors that taking. It's not something a lot of people think about. In some way, sometimes it's sort of viewed as almost a heroic thing. Look, this business, they're in there, they're not taking it. But you're seeing that, you're interpreting that differently.
Yeah. Well, you don't get into business to. You get into business to want to build something bigger than yourself. That's what you do. No one starts out in business going, oh, I just want to. I want to have 100 employees. I don't care whether I get paid. No one does that. But the business owner is generally the one who's taking the money out the last. And if there's no money to take out at the end, then there's no money to go around. Business owners by nature just get on with things. They don't whinge. If things are stacked against them, they just work harder. That in of itself becomes, counterproductive to their businesses.
How does the broker become less transactional and more consultative? Like I'm wondering, often the broker is, they're canvassing for business with their clients. Obviously, they're not sitting back and waiting for the phone to ring. But to what extent should the broker, like we're talking about this bank manager thing. Now, I remember back in the day, in the 80s, and that there'd be in the commercial bank, there'd be regular reporting. Should brokers be looking for regular reporting from their clients outside of, maybe quarterly reporting, or chasing up those quarterly figures just to be ready?
Yeah, and I think it's the way in which you engage with them. It can't be a negative thing. No. They don't want to talk to me. They talk to me because they're in a position where they feel like they have to talk to me. Whereas a broker has the ability to be a little bit more proactive about those sorts of things and can take a tack. So it shouldn't be a negative. It should be well, let's sit down and let's see whether the current facilities we have in place are appropriate. Not only does that drive your business as far as a broker, because you can potentially find opportunities to write more, but you can start looking for these indicators. You can become that trusted business advisor that got lost when the bank manager disappeared.
What, Anthony? We're talking sort of about the, being able to see maybe the negatives that the client can't see. What about positives? I mean, have you been in a situation where the owner of the business or the principals have been so involved they're not seeing opportunities for growth, or?
Yeah, I think the topic of sort of director wages is interesting as well, because I can see it as a positive or a negative. But one of the very big positives is, as a business owner, you need to value your own time. So when I see that a director or an owner is taking a salary, a commercial salary, I see it as them. It's more indicative of a well-run business, because they say I'm expendable, right? I should be able to replace myself with somebody else. If this company is only making a profit because I'm working 20-hour days and not taking a salary, it's not really a business, is it? So it tells me a lot more about the business if there is a director salary. That sort of the mental stress that people go through as business owners as well does hide a lot of the more positive attributes from their vision as well, right? So yes, a little bit of a fresh perspective. They might get bogged down on ATO compliance even, right? But they might get bogged down on their margins, right? But they're sort of missing the growth opportunity over to the side. But that brings me to where is the broker's role and opportunity in this? It's really as a referrer, right? And as a broker, it's all about relationships. And yes, we all want that deal to help the borrower client at the end of the day. But how to do that? Put the client in front of the right restructuring person to help them through that. Sometimes it could be a referral to a mental health specialist to say, go and, you're too stressed, right? Go and talk to somebody about this, get a bit more relaxed, and that'll give you a new perspective on business. Go and talk to a lawyer. But two other things I see is owners are typically more stressed than they need to be, particularly with a bank breathing down their neck. So the majority of deals I've worked on would be a client that has borrowed from a bank and is in bad bank and needs to then move to a non-bank lender, a credit fund to refinance. And they, as soon as they're in default, they're like, oh no, I'm going to lose everything, right? And it's actually, no, it's not that bad. Like banks will give you a lot of time. As long as you are transparent, as long as you give them the information, there's actually a pretty long leeway. As long as you can tell the bank that I've got a plan, I'm working with the right advisors, I do see a way out. Banks are so scared of reputational risk and everything these days that it's hard for them to enforce too much. So it's getting the right people around. The other thing is when you then sort of turn that into a restructuring or a refinance perspective is that business owners are so used to selling a growth story that they forget what a lender wants to see. And when you say, well, what are you going to do with this money? Oh, we just need $5 million and our sales can go through the roof. It's like, I don't want to hear that as a lender. What I want to hear is, if I borrow this $5 million and everything goes to shit, right, this is how you'll get repaid. A lender doesn't make a lot more money if your equity goes through the roof, right? So you need to moderate down your forecast sometimes and say, I just want to see things go normal, and I want to see worst case scenario, not best case scenario, because I don't care about that. That's what you tell the equity holders. So it's a different perspective to what a lot of business owners and borrowers have been used to, but it's just about framing that for them, making sure they get the right help, and when they do get that help, when they do have a great go forward plan, they're going to come back to you for the actual refinancing.
Okay, Cameron, what are some of the other areas that brokers can help build relationships with their clients? I mean, I know you're big on the regulation, so can you talk a little bit about that? Like, you've got your director's shield,
Yeah.
so are you able to tell us a little bit about that?
My personal opinion is I don't think, and I've been in business for 20 years, I don't think it's ever been harder to be a business owner. I think we've got a significant productivity problem in Australia. You can't manage staff that extra 10% that you need to in order to make money because they'll just go, well, bugger you, I'll go get a job elsewhere, and they can. I think the economy at the moment is, it's underreported just how difficult the economy is at the moment. And I think thirdly, the level of red tape or compliance that business owners need to adhere to these days, it just keeps getting more and more and more. For example, they brought out single touch payroll a couple of years ago, made it mandatory a couple of years ago. Yet we're still reporting on pay as you go within the BAS. Why? Why are we having to double report the same numbers? And that's just one example, but there's just this pile-on of compliance that is going on at the moment. The other challenge is that there's other things happening in the industry. For example, the accounting industry. Accounting is slowly being turned into becoming agents for the ATO. It's becoming very transactional. It's becoming very risk adverse. They released some changes about 12 months ago now, where accountants are now forced to dob in their clients for things, which erodes the trust of business advisors. So there's all these macro and micro things at play going on, and your poor business owner who might be running a manufacturing business, or I might be running a plumbing business, might have 15 might have 3 building crews going building houses. How are they supposed to keep up with all of this? So what we're trying to do is, through our Director Shield program, is provide that higher level to say, well, let us provide you some assurance that you're looking at all of these things. Are you getting to the point where you should be having systems for HR? Are you getting to the point where have you got enough sophisticated reporting in place so that you can quickly and easily report back to the stakeholders, including the lenders, the brokers, that kind of thing? That information should be available. You should understand that information. Putting your head in the sand in this day and age is fraught with danger as a business owner. So that's the problem I think we're trying to tackle from a perspective of business owners need assistance. They need someone in their corner.
And where do you think, are you able to sort of broadly say where you think growth opportunities are for small business, and then how can advisors facilitate that? Like, is it organic growth? Is it mergers and acquisitions? What?
I think the AI industry is going to change things significantly. I think we're going to see a lot less of the medium-sized businesses. I think we're going to see a lot of micro businesses, sort of 1 to maybe 10, 15, 20 staff maybe. And we're going to see a lot of the bigger players that are hoovering up a lot of those micro players. But I think a lot of those micro players will become very specialised in very specific things. I think that's the way it's going to work. I think AI is not going to take away the role of the business owner, because AI is not going to identify commercial and identify and capitalise on commercial opportunity. So AI might be able to help facilitate that, and might, where a business might have needed 50 staff to achieve an outcome, they might only need 20 staff to do that in the future because of AI. But I think it's not gonna necessarily take over the role of the business owner. But that role of the business owner is going to become more and more and more, to the point where and the expectations the government and stakeholders are going to put on them are going to increase over time, as it has for the last 20 years.
Okay. And Anthony, just to that, do you think that businesses I know it's a very general question, but is the growth organic? Are there organic opportunities, or is this market just, we've been talking about, private sector growth has been absolutely anemic. So is that somewhere where you try and grow organically, or you try and grow through acquisition? And then again, what's the role of the finance broker in that?
Yeah, I think it's a tricky one, and I recently went to Japan just on a family holiday, and I've been there 100 times and have lived there and worked there, and I took my kids, and I was trying to show them not that they would listen, but at how the economy works over there, and here when we talk about business, or Brisbane being busy or something, coffee shops might be busy for a few hours in the morning, shops might be busy in the afternoon for a few hours, but we're not really queuing for that many things. And in Japan, you've just got such a density of population demand that a coffee shop can be like busy, like have a queue for like 18 hours straight in a day, right? And every shop is just so busy, but prices are still so low, and the economy is kind of struggling. So it's a bit of a conundrum, because there's clearly some macro issues at play, but Australia is a very, very difficult operating environment. There's just not enough population density for some retail businesses like that. Obviously construction and population growth, particularly in southeast Queensland, is great, but I think it comes back to business owners understanding exactly what it is that they sell, right? Exactly how they make money. I talk to too many business owners that kind of say, customers deal with us because of our reputational quality. It's like, well, excellent, let's put the prices up. Oh no, I can't do that. So, well, why can't you? They oh no, but they'll leave us and go to a competitor if you increase prices. It's like, well, okay, well, that kind of answers that question. But it's what you're not selling that particular widget. You're selling the solution to a particular problem for a client. Once the company understands what value they're actually taking to their clients, it's a lot easier to build on that, to get that organic growth. With the inorganic growth, I think there's my view is that there's a lot of businesses still that are probably owned for the wrong reasons. People trying to get out of employment to own a business or something, right? So, the wealth transfer across sort of generations is going to hit us very big. I mean, it's still a very disintermediated economy, right? So we've got so many small businesses. There's not a lot of consolidation in a lot of industries. So yes, I think that that inorganic growth, we will see a lot more scale, but it comes back to understanding exactly what is your company's function, what is your purpose, what are you actually selling, and capitalising on that rather than just growth for growth's sake.
It's interesting. So I think that so far we've got, some value add that brokers can do is actually helping a business owner understand what their business is. There's this old, the Gers, but what was his name? The working in your business, on your business, not in your business.
Oh, absolutely.
And when you're in the cut and thrust, I mean, every day, I know that in my own business, you're so busy doing what you have to do every day that you don't step back and see what the business really is sometimes. The definition of business, I think they call it in the textbook.
Well, it's even just understanding, and I've dealt with clients of, businesses that are worth hundreds of millions of dollars, and, obviously they've got teams around them, the CFOs and finance teams and BD teams, but the owner or the MD still, confuses kind of revenue with profitability. Thinks because we're making $10 million on this deal, it's great. It's like, no. Like the amount of time and effort and resources it takes to make that revenue is lowering your ROI. It's lowering your margin, right? And just not, it's some very simple things like that sometimes that you've got to say no to that really big revenue opportunity because it doesn't actually increase profitability.
It's funny you talk about putting prices up. I'm brushing up on my Greek, and I've got this Greek language teacher, and she's never got a spot. I've got this 12 o'clock Thursdays, and she's got nothing else available. And I said, can I give you some business advice? You need to put your prices up. It's obvious.
Yeah.
For everybody else except me.
Yep.
But sometimes it's that sort of thing where people don't have the confidence, but you and the broker is sort of able to see things rationally, step back a little bit. So can we I think we're just looking at the time, we might just finish up by asking, and before I ask you guys for some questions, so I'd like you to think of some questions that for the panel. But I'm just wondering, one of the things for me is having a team. So I like to think that you come to a problem. I know a lawyer, or I know a few lawyers, but whom I might be able to plug into the situation, because sometimes if it's a restructuring scenario, you need to have a lawyer in your team. Sometimes you can see that the business owner is on their own. And you're going, well, who's advising you? Oh, the insolvency person. Well, no disrespect to the insolvency person, but the insolvency person is
not their job.
It's not their job.
No.
And as soon as you engage them formally, they're going to tell you, I act for all stakeholders. I don't just act for you. So you do, and you talk about director advocacy, right? So you go, well, who's advising you? Like you've got the bank telling you what to do, and you've got the insolvency person trying to steer you down this path, so you need you need to have a team. You need to have a team. I like to have someone who I can plug in to do the forecast, to look at the financials, and to provide the monthly reporting, whatever it might be. I even gave someone some advice the other day. I've got a friend who runs a marketing and PR business. And I said, you need to go and speak to this guy. I mean, I'm sure the first consultation will be free, but you need to get some ideas on how you're approaching the market as well. So, I mean, how do you what are your thoughts there because the brokers are very much, even if they're within a larger firm, they are like that, a one-person team to some extent. How do you go about building a team around you of the right people to bring a total solution?
Well, it's all just about experience, right? And you can be a very experienced, restructuring professional, even in a particular sector, but you probably haven't come across that sector with director penalty notices, and with ANZ, and with someone else on the other side, right? So the more you can kind of spread your network and get that very, precise experience for that, type of situation, the more relevant it's going to be to all the stakeholders. And, yes, professional qualifications count, but, a lender that you're trying to manage is going to be more, I think more comfortable if you can sort of say, here's an advisor, a lawyer that's worked on this exact same situation before. This is how we dealt with it. This is how we're going to help in this current situation.
Cameron?
Yeah, I 100% agree. I think no one person can know it all, and especially in my world, you see some wacky things, some really weird things. I'm dealing with a lady at the moment who is having a fight with the ATO about a $9.5 million GST refund. So it's and the ATO want to double that because effectively double that as a penalty. So they're chasing it for 22 million plus interest, including interest. And you sit there and you go, and then you overlay over the top of that. This lady's got terminal cancer. And you sit there and you go, well, like normally I go, well, we save the business, we save the going concern of the business, but this lady's got this lady with terminal cancer, does the business matter? And so you overlay all these complexities and you just go, well, what's the right answer here? And even I'm struggling with this one. So being able to bring in those people, and I've got a very good insolvency lawyer that I brought on this matter. I've got a tax lawyer that I brought in on this matter. We've got an insolvency practitioner who's the one who referred me this matter. We've got this team of people, and we obviously got to be careful about what we say to the insolvency practitioner, but this team, between this team, we'll find a way through. It's probably not going to be pretty, but these circumstances really are. But as a broker, it's about being prepared for that to come and cross your desk. You don't know when those matters are going to cross your desk, so you need to have that network in place before it does, and be prepared for it.
Okay. Do we have any questions for our?
Yeah, I've got a couple of things.
Yeah.
I think it's a great talk today. I'm in a space where I'm taking product to market for this one to an extent, where I'm working with companies. And the first thing, it's taken me a while to figure out the fight process, and it's tell me about your systems, tell me about your processes, tell me about your data, tell me about your structure, and tell me about your people. Once I understand that, I can help you with taking product to market. Right? Because if you don't have data about the current market, I have to go and get the data. If you don't have the right people, and I'm working with a company in the sunny coast actually, and they want to go into Western Australia. They don't realise how much it costs for a person over there per hour, per day, and they think it's the same price over in Brisbane. And the availability of people. It's a hydraulics business. You can't just pack up and go to West Australia and let's take it on. There has to be some process there, and some of the smaller companies I'm working with, they don't even have a business plan. So where do you start? And I think that the advisor role or the broker role is an advisor, business advisor as well. And I think over time it's a perception too. What are you? It's how you sell yourself. I think getting that trust and building the relationships with you guys too, and then finding the right connections, which is the other people around you, whether it's an IR person or a marketing person or a tax or lawyer. I think having access to a well-refined network of people that can assist you, and I think when you sell yourself, you need to be able to sell that too. Then they can start building the trust.
Yeah, I really believe in what you're saying there. In terms of it's not just who I bring to the table, for example. It's not just me. I've got a team of people. Maybe we'll bring Anthony in because to overview the business, or Cameron, or it might be a lawyer who's specialised in a particular area. I wonder. It's interesting because you're talking about business plan, and one of the things that you're forever looking for as a lender, particularly in a in a scenario where the historical data doesn't support a loan. You know, it's either a turnaround or a startup or you know, some a growth spurt, and it's just disappointing how often, and we've talked about this a lot. You know, three-way forecasts. You know, just a rolling balance sheet, rolling P&L, and rolling cash flow. And obviously, to do that, you do need a business plan that sits behind it. Otherwise, how do you derive the numbers? I mean, do you see a lot of SMEs with business plans, or? Yeah.
No. So three-way forecast is one of the things you just don't see them anymore, and it's one of the things that for the bigger matters, it's one of the first things I do is a three-way forecast. A forecast is not so much about what the forecast says or whatnot. That's just an outcome. What the important thing is behind the forecast is the assumptions, and how sophisticated is the business owner in informing you what those assumptions are. If you've got, and that can do one of two things, and it can also help us determine what strategy to move forward with. If the business owner is coming to us and they've really got no idea, then you sit there and go, well, is this business actually going to be saved if the business owner doesn't know what they're talking about? But if you've got a business owner who doesn't know the path forward, but really knows what their business is and can say, yeah, this is the assumptions and I'm pretty confident about that, you can spit out the forecast and go, yeah, okay, I see a path. And then we can give that to someone like Nick and say, well, Nick, we think we're going to go backwards in cash for the next 6 months. But because of A, B, and C reasons, this is why we think it's going to turn that corner. That gives Nick the confidence to go, yeah, okay, I can see that. You know, so that it's that underlying. Does the business owner have the underlying sophistication behind what they're thinking? Have they learnt the mistakes from the past? Do they understand the drivers in their business? And that will give you a pretty clear or pretty good internal feeling as to whether this is something worth investing in. You know.
Yeah. And look,
Harry was talking about data.
Yeah. Like I don't want to go too far off piste, but I've kind of seen the opposite as well sometimes, where you know a lender will come in and say, "Oh, we need you to do a three-way forecast," right? And there's a lot of you know borrowers that haven't done three-way forecasts before, right? So if you sort of say, "Oh, here's your transaction model," like every week or every month you've got to do the update this and everything, it's like it's just a huge additional cost on the borrower. But there's a way as a broker, as an advisor, as a borrower to, you know, control that narrative a little bit more. And you say, okay, well, we don't necessarily need a three-way forecast in our business, but it is saying this is the data or this is the information that drives our business and our decision making. And if you can sit down with Nick, if you can sit down with a lender and say, we don't have those forecasts because we do it this way, right? Here's the numbers we look at every month, and we know that this thing of like utilization hours per work team, right? That's our key driver. Historically, look at the link between this and that, right? So when we report our numbers every week or every month, this is the number that we focus on, and if we hit it, this is what we do. If we don't hit it, this is what we do, right? That's what a lender's really looking for. So it doesn't have to be a three-way forecast, but it just needs to be an understanding of the business. How do I record that, report on that every month? How does it change my behaviour? Nick's going to like that a lot more than just do a three-way model, a three-way forecast for the sake of it.
Yeah, I mean, where there is a forecast, as Cameron says, he says that the most important thing is the assumptions. And I guess, I certainly the process of planning, it's like any business plan, it's not necessarily, the plan is just the output at the end, but it's what goes into it. And then being able to articulate a story.
What you really want is, you want the business owner to demonstrate proactively managing the business, not reactively managing the business. If they can demonstrate that and that's a large part of what I go in to do, is proactively address these problems where they've been sitting on their hands going, I don't know what to do. Whether that's proactively reporting or whether that's proactively having the conversation with the lenders going, hey, this is the situation we're going, and talking to what Anthony was saying before, proactive stakeholder management can be the difference between things going really well and things not going well.
Okay, any other? Yeah.
You guys are talking all about data and getting information to inform the lender. When there's lenders in the market that do no doc or low docs and all of that sort of stuff, where it's easy for a broker to sort of get a deal pushed through, is that a genuine and sustainable product for businesses? Because we're talking about no docs, low docs. That product is something that works for businesses that don't have anything. So is it really helping a business that they're not getting pushed to provide that information and get it up to speed?
I might just, that's a great question. I mean, and I know Max's pain because we see deals where the client's gone, I need cash, and there's a lot of very easy, low doc, no doc, and when we get to the deal, there's maybe 3 or 4 of these easy $200,000 loans, and no one's ever really addressed the problem. It's like, I need to put out this fire, just give me some cash. But there's been no thought that's gone into what's causing the problem, and how are you going to deal with all this debt?
Look, if I see that situation where there's already a couple of those lenders in there, I'd kind of say, well, I'd rather throw that data, overlay that information in, make it a better quality deal, and take all of those other lenders out as well. It's always, what's better for the borrower? It's always to have, better data, better information, better decision making, and a better loan as a result of it, right? So, I mean, yes, as a lender, you kind of go, okay, well, I don't care, right? I'll give you money on these terms as long as my position is secured. But as a broker, as an advisor, it's really sort of what's the best long-term outcome for the client? That is, well, let's fix your business, fix the problem, and get you the best loan terms.
I've got a saying, at Hermes, I want to solve the problem, not become the problem. So it's one thing to pay out the ATO and the NAB, but if you haven't advanced the issue, I'm wondering, Cameron, you were talking before about, directors not paying themselves as being a symptom. I just wonder whether or not, a whole lot of band-aid solutions, is also symptomatic of not addressing the issues.
Yeah, it very much is. The lenders that we're talking about, they're generally not put forward by advisors that have the best interests of the client in mind, except if there is a genuine, if there is a genuine assumption that yes, the core issues have been fixed, and there is no security, we do need to go down a path like that, but there's a great deal of confidence that the core issues have been fixed, and it is genuinely a short-term working capital loan, sure. But the vast majority of times I see them, and I see them a lot, the vast majority of the times I see those type of lenders in, it's fine, I'll just grab another 100 grand because that'll see me through this problem, but they're actually not looking at the core problem itself. And then they'll overlay 1 or 2 or 3 of those, and then by the time we see them, they've got 500 grand's worth of these debts, and there's no choice. We have to push it down an insolvency path.
Well, it's like I was telling you earlier about that scenario where it's like, okay, we want to pay out this and pay out that, and you go, yeah, but hang on, why? What are you? Is the business actually profitable? Is this a fundamental problem? Look, I'm just conscious of time, so we might wrap up. Final questions? No? All right, very good. All right, well, Anthony Brittain, thank you very much for today. And Cameron Whinnett, really appreciate it. And thank you for everybody coming along.
Thanks, Nick. Appreciate it.